All right, welcome back to Market Day Report. I am Scott Shelley, otherwise known as the Cow Guy, and this is it, right? Unless, well, I'm sure you're going to stick around. 1 o'clock Central, 2 o'clock Eastern, top of the hour right now. Cow Guy closed, all right? Or if you want to see me on Twitter, at Scott the Cow Guy, but we still have lots more to get through at the top of this hour, so stick around after we get done with this here on Market Day Report. Why don't we take a look at corn in case you do have to do something at the top of the hour. 14 and a quarter cents lower in that subcontract. 5.98 and a quarter is last. We kind of added to the losses here a little bit. Deese is off 14 and a quarter cents to 5.96 and a half. If we move over to soybeans, I'm sure they've bled a little bit out here too. 17 cents lower in that August contract. 14.80 and a quarter is last. Novi new crop down 19 and a half cents to 13.60 and three quarters. Moving over to the wheat. Let's see what's happening in Chicago wheat. Well, September's up a half cent, 2 ticks, 8.13 and a quarter. Deese comes in sharply unchanged at 8.29 and a half, and then as you go out the deferreds, you lose between 1 and a quarter and 2 3/4 cents in Chicago wheat. Still kind of quiet. Hard red wheat, Kansas City, the HRW down 4 cents in SEP. 8.70 even is last in SEP. March is down 4 3/4 cents to 8.83. Moving over to the spring wheat in Minneapolis. Spring wheat, look at that, down 9 cents. 9.30 even is last in that subcontract there. Well, we've got a 7.5 cent loss in the March to 9.54 and a half. Let's take a quick peek at cotton. We'll get to our next guest analyst. Cotton comes in 14 points lower in Deese. Boy, that just seems like nothing really. This thing's been all over the place as of late. 92.86 is last in Deese. That gives us a chance to get in touch with our next guest analyst, Ted Seifried from Zaner Ag Hedge. He's in Chicago. Ted, thanks for joining the show. All right, well, taking into consideration yesterday's action and today's action, what do you got?
Yeah, great question. We've got some very indecisive markets right now at the moment, Scott. Sharply higher yesterday, rumors of China buying yesterday, and then sharply lower this morning on ideas that maybe China's going to slow down and not need to buy as much. And then we've had a really substantial bounce off the lows. Actually, it almost felt like we were going to go back towards unchanged there for a little bit. And now we're kind of selling off a little bit here into the close. So very indecisive markets. It's making it very difficult to try to figure out which way we're going to go. What we do know is that we haven't been able to see any follow through to the upside after the very strong day yesterday. We haven't been able to see follow through to the downside after the very poor weak open that we had this morning. So maybe we just kind of choose sideways for the time being, waiting for that next shoe to drop. And I think the thing that we're lacking in these markets right now, Scott, is any very real conviction by the fund crowd. We've had that in the recent history with them really selling for that inflation off trade, for that global recession concern, and that put a whole lot of pressure on market. It seems like there's a sprinkling of that here and there right now, but it's not sustained like it had been. And then when it's not around, we see some of this buying come back as we start to try to trade actual grain fundamentals, try to trade the weather, the concerns that we have in August for the soybean crop, and so on and so forth. So a real tug of war, and everybody kind of picking their timing. It's making for, like I said, just very indecisive markets at this point. I'm a little worried that this round of selling is not over yet. But then I look at crude oil, really challenging very key resistance here, and almost looking like it wants to break out of the short-term downtrend. And and then I start to feel like maybe this waits for a while. Maybe it's on pause until we get closer to the fall, and then that inflationary bubble burst comes in earnest. And we see this selling based on recession fears and so on and so forth.
Right. Yeah, I mean, it's hard to disagree with that. And it feels like everything's kind of in a holding pattern here. So we'll see what we get from the government. We'll see if we get an interest rate hike. We'll see if we get a recession. There's just a lot of things out there that we have to wait and see on. So stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk with Ted Seifried from Zaner Ag Hedge after these messages. All right, welcome back to, what is this, Market Day Report, right? It's not my show yet. I'm getting excited. Let's take a look at what we've got going on in the livestock markets. That's what we're going to talk about now. Live cattle will be the first stop, right? That's Chicago live cattle. And we're not doing too much, right? And it's gone. That's the old joke. August, up a dime, 135 spot 72. Look at Deese live cattle in Chicago, 146.67. Steady better, really not too much to make here, except for the fact that it's nice to see those things on an uptrend. We had a lower corn board. That's going to affect feeders, isn't it? It's going to give them a little bit of juice. August is up $2.02 to 178.70. And we got SEP up $2.37 to 181.80. And then lastly, just to get back to our guest analysts, we've got lean hogs. They were mixed earlier today, and guess what? They are still mixed. 97 cents higher in August to 113.10. If you go out to, say, February, we're off 62 cents in Feb to 88.40. So front two are up, back three are lower. We're going to call that decidedly mixed, and we're going to bring back in Ted Seifried from Zaner Ag Hedge. Ted, thanks for sticking around, waiting in the wings. I'm sure you've got something very prescient to say about the livestock.
Decidedly mixed indeed, Scott. Look, the Hogs, I think, really just needed to take a little bit of a breather. And the fact that we're not giving back some of the recent gains, I think, is really supportive. So I like what we're seeing in the Hogs today. It can't be sharply higher every day. I like the look of the chart, so on and so forth. Again, and I've said, I think Hogs are kind of the darling of the speculative investors right now because they work for two reasons. One, if we're going to see this inflation back on trade, well, that should benefit, commodities as a whole, all commodities. And also, on the other side, if we're going to go into that recession trade, well, that's the cheaper alternative for protein. So that might find some extra demand. Again, I think the specs like the Hogs right now. As far as cattle are concerned, it's great to see the feeders find some strength on a day where corn is down. Feeders kind of actually suggesting to me that corn is going to stay down. But it's good to see that we kind of beat the feeder chart up a little bit in the last few days or so. It was kind of a disappointing follow through to the upside, but this is a better day today, and really like seeing what we're seeing. You kind of wish cattle would get a little bit more oomph out of it. And that chart too needed to get a little bit of a shot in the arm after kind of failing after an attempt at a breakout. So hopefully we're building on that. Hopefully we're building on the stronger feeder cattle, and the cattle will start to follow with.
All great stuff. Really appreciate that. Way to summarize everything. Good content. That's Ted Seifried, Zaner Ag Hedge, coming to us from Chicago. We're here in Nashville, and this is the last time I'm going to throw it back over to Suzanne.